Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast. We are extremely excited to have an amazing guest with us today, Ryan McKenna. Ryan, thanks for joining, sir.
Hey, Abel, thanks for having me on.
Man, I'm humbled and appreciative, and I know my listeners, like, they hear me kind of say this, but this is an amazing guest. We're very humbled and very appreciative of having Mr. Ryan McKenna on. So if you don't know Ryan, let me just at least explain or give you a little bit of his background, because it's pretty awesome before we dig in. And Ryan is a full-time real estate investor, syndicator, founder of McKenna Capital. It's a private equity company. They basically help people invest passively in real estate syndications, but they've done this successfully for years, focused on value add, like they do self-storage, alternative assets, multifamily, kind of the stuff we were normally talking about. But they've helped hundreds of investors around the country invest in commercial real estate. And get this, listen to this number, everyone. They have over 10,000 units with a portfolio asset of north of $1 billion. So to say that we can learn a few things from Ryan today, I think is an understatement. I would say grab a pen and a piece of paper. It's probably going to be a great one to listen to. And if you're running or jogging or on the road somewhere, when you get home, you want to hit rewind, I'm sure. Ryan, let me let you introduce yourself, my friend. Tell us a little bit about, you, and we'll just dig right into what you're doing today, my friend.
Oh, well, thank you for that intro, Abel. And I guess to just tell you a little bit about myself. I mean, I've always been very entrepreneurial. Even at an early age, what really drove me to be in the place that I am in today is just a lifestyle by design. I had seen many people out there that build these great businesses, these great companies, and really give themselves that time freedom that they can spend more time with loved ones or friends, or coach their kids' sports. And I was fortunate that I grew up in a family where my dad had his own business, and I got to see that firsthand of what it was like to be an entrepreneur and to control your time. And I'm very thankful that he was able to coach me in every sport, and that I had great support from my mom as well. And so that really drove me to want to build a business and create that passive income that I could really give myself that flexibility. And, growing up, I didn't know what that, was going to be until I kind of stumbled across Rich Dad, Poor Dad, actually back in college when I was playing baseball at Arizona State. And I had a teammate of mine, his father was an apartment syndicator. And so I had firsthand, mentor experience from someone who was in the field doing this. And so, curiosity set in, and I started asking questions, and really kind of just in my mind setting the blueprint for how I was going to create this, lifestyle by design. I mean, I felt like I knew the path. It was just a matter of kind of getting there, putting all the pieces together. And that's really what drove me to create McKenna Capital. Not only, my own personal investments I'm doing, but I'm helping others, achieve financial freedom through passively investing in real estate syndication. So, there's a lot in between there that we can unpack.
Awesome.
But today, we've got a, thriving business, and each day it's growing, and I'm just, lucky that I get to participate and help others. And, it's just fun to be part of a great industry that is really, doing some amazing things out there. And, I'm just happy to play a small role in that.
Yeah, it's so awesome, man. Congratulations on all your success, and God bless you and your family and everything that you're doing and helping investors. That's so cool. So I would love to start. I want to hear more about your backstory. For all the listeners that are hearing, just Google Ryan McKenna multifamily, Ryan McKenna Capital. You'll find a ton of podcasts, and he's got a super inspiring story on how he gets started. So I do want to talk a little bit about that. But first, really tell us about today. What in the world does 10,000 units look like? What does $1 billion of assets look like? Like your team, your organization, the structure, what how many people, just give us a little bit of demystify what that even looks like.
Yeah, it's a lot of partners, very successful, group of teams, a ton of collaboration, a ton of communication, and a lot of work. It's
Yeah.
not been easy, but it's been fun to build. And, when you can create systems and, scale your business, once you kind of figure it out, you can kind of, easily repeat it. And, a lot of what we do, is coming in as a co-sponsor or a JV partner in the deals that we put together. So we've got several partners that, we get in, at the earliest stages of a deal where they might uncover it, but we're talking about, hey, is this a good acquisition? And then, if we like it, I'm putting up earnest money to help secure the asset with them. And, in some cases signing on the loan. And so, these are true partnerships. And, I couldn't do that without some other great groups out there in our investor base. But yeah, I mean, we're in roughly, 10 to 12 markets. The 10,000 units is not concentrated in any one market. It's spread across many, and that's part of our overall diversification strategy. So as a passive investor, not only do I, focus in multifamily, but there's other asset classes that, I like to further diversify into, like self-storage, mobile home parks. We've done an ATM fund. We've done litigation financing. We've done a food hall in Nashville, Tennessee. So there's other things that we focus in on, but, truly what we do is, it's all about relationships and, nurturing those and really reading people because, in this business, I see a lot of different deals and, all the numbers start to look the same after you go from deal to deal. And really what I think is most important is the people behind it. And if you can get that part right, I think you'll do well long term, just because, I've benefited from surrounding myself with really smart people that I can learn from. And I think, if you can do that, you're just going to give yourself more opportunity, more chances, to get things right and to learn from others' mistakes. And so, yeah, when I was building the business, I was, constantly, trying to learn and see what others were doing that had already built successful businesses and trying to emulate, what worked for them and avoid the things that didn't work. And, we didn't get everything right, but, we learned along the way. And, when I made one mistake, I try not to make it again, so I don't repeat those mistakes. But
Yeah.
yeah, with, social media, thought leadership platform, I would say 15 to 20 years of business relationships that I had going into this, that all helped. It wasn't something that, like an overnight success or anything like that. It was 15 to 20 years of building relationships along the way that allowed me when I got into this full time, that, these trusted relationships, people that, were interested in reconnecting. That's really what I, tapped into to kind of, launch the business and get things off the ground.
Yeah. Yeah. That's so inspiring, my friend. And then, to kind of recap a couple of things that you've already said, right? You're creating systems, and that's, that ultimate premise of the purple and yellow book, Rich Dad, Poor Dad, that a lot of us have read. And, sometimes we kind of, it takes us a while to figure those systems out. But once you get them, once you figure those out, now you can deploy them over and over again. 10 to 12 markets, multiple different asset classes, makes a lot of sense. You've applied them well, Mr. McKenna. And then I like a couple things that you mentioned, man. You put smart people around you. I'm a big fan of that. I've done that for years and had my professional success because of that. And now I'm trying to deploy the same mindset to commercial real estate. Just better people than I can find, or the best people I can find around me. You're going to learn from them. And I love the fact that you said, hey, we're not perfect here. We made a lot of mistakes, but we learn from everyone. And, obviously you're trying to minimize those so you don't make them again. But man, a lot of those things will keep people from moving forward, and you definitely haven't had any problem moving forward, my friend.
Yeah, and that's
Taking a
the
lot of
one,
action.
piece of advice I would say too is, you could read all the books, listen to all the podcasts, and go to every event, but if you never take any action, it's kind of like, what's the point of doing all this work? So at some point you have to get comfortable with pulling the trigger, and you might not get it right, but as long as you're close to your mark, you'll learn from that and you'll keep pushing forward. But it's kind of that whole saying, paralysis by analysis. You could overanalyze things and never make a decision, and you're just going to kind of keep spinning your wheels here. So eventually you just have to have that conviction that, look, I might not have the answer 100%, but I'm going to throw myself in the right place or around the right people, and you just have to believe that good things are going to happen.
Yeah, I love it. All right, man. That's awesome. So, how did you even, begin this run? Because we had, me and Ryan were talking kind of before the interview, and what I told him is there's this interview that I heard from him, and his first initial, I guess the first inspiring moment that I had listening to him on a podcast was him explaining about passive income and creating that, passive enough of that, to end up, taking your returns, putting 500K in or whatever the amount is, and you're earning a solid, solid return every single month. Cash flow comes in or quarterly or whatever. But you went from passive to active. You took some action and you move forward. Maybe talk about your first, the first hurdles or mental obstacles that you had to overcome, and then we'll dig into today too. But what were those first obstacles or hurdles that you had to overcome to kind of just move forward, take action?
Yeah. So, first I had to, make some money that I had that I could, deploy. And when I had that, I had the relationships already kind of, laid out somewhat from my research and just, people in my network. So my teammate's father, his syndication business was, he was the first one I went to when I had enough capital to invest. And
And
I did
how
my
old were
first.
you?
This was
Sorry.
back in 2016 when I started in multifamily syndication. Prior to that, I did dip my toe a little bit into single family and vacation rentals, but
Mm-hmm.
multifamily is ultimately where I wanted to be and get to. And so, yeah, there was a period after college where I built another business, did really well with that, but it took up a lot of my time. And then as I was kind of unwinding that business a little bit, I took a lot of the profits and rolled that into real estate. And so I had kind of I had the strategy all laid out in my head. It was just a matter of, deploying it at a certain point where, it made sense, where the business spun off enough that I could, easily, build up a passive income portfolio, because my goal was to have something, long standing that will be generational in nature. And so I had these relationships, and then when I had the capital, I knew where to put it. And so
Yeah.
I put it, in my first 5 deals with the same operator. But then, for the next 7 deals, I started to go with other operators in different markets because I wanted to get, different exposure, different experience, all while I was, learning along the way with the intent at some point, I wanted to be that syndicator that was, putting deals together for others. And, I learned a lot through that process, and it gave me the confidence to really kind of launch my business. So I spent about a year or so while I was still working full time, and making these investments and growing my business. So I had a lot going on. I actually was in the middle of my MBA at Notre Dame as well. So for any of you
Dang,
that
you were
think that you're
busy.
busy, I'm going to tell you, you can do it. You'll figure out a way if you're that passionate about it. And so, over a 3-year period, I was able to invest enough passively that I left my corporate job. I walked away, and for about a year or so, I was, simultaneously building my syndication business too, on top of passively investing. And, I kind of hit the ground running. I spent a lot of time, planting the seed with people in my network, letting them know, what I was doing. And I think, having invested passively before in these syndications, gave me, the ability to speak firsthand of my own experience and to share, what I was doing. And I think that really resonated with a lot of people that, didn't know that these types of deals existed. And now, they're talking to someone who's not only invested in them, but is also trying to put, deals together in the future. So that's really how I got started. And I just really, hustled out there. People in my network, I put a list together of 250 people that I was, close to. I wrote it down on a spreadsheet, and I reached out to every single one of them individually to set up calls, coffees, and it was just to catch up and let them know what I was doing. And I was amazed with how many of those people were interested in, staying in contact and, waiting to hear, when something did come along. And that's really what started everything. And then I just doubled down as I started growing the business. And, and here we are. It's just now people are coming to you, and you're getting, a ton of referrals. And that's the ultimate, I think, place when you're, coming from that position where, you're seeing your hard work pay off, and, you've put in the blood, sweat, and tears, and now, your business is growing organically, and that's pretty cool to see.
Yeah, that's awesome, man. I'm taking a bunch of notes over here. And you started, you had an opportunity, one that you took, and that was in college or prior. You built up enough capital. So I know we're talking about today's, your position, but you were very obedient to the process, even younger, because had you not done whatever you needed to do back then, you wouldn't have had that capital to invest, right? So like you already, you knew what you needed to do: earn some more money, create some more capital, figure out a way to get it invested. And you already, had the mindset to like take that action. That you sought out the people. I think I heard this right, and tell me if I got it right, but the relationships plus the capital, and the relationship that you had, that was your friend's father. So the trust, the speed of trust was there. You've seen him do it. You know how to do it. Okay, cool. I have no issue giving you my money, but man, I'm sure you learned a ton through those first 5 deals. So all of those things are awesome. What can you illuminate, about this process, even the first beginning part of it?
Just as far as like coming into a deal for the first time as like a passive investor, and
wherever you want to go, my friend. We've got passive investors, we've got active investors. I mean, whatever you want to share with us, all of it's going to be wisdom.
So I can tell you, as someone who was, interested in, making passive income, but also, investing in, opportunities that had, a high degree of reliability, consistency, with the value add multifamily deals. I had just seen enough of that process to know that, one deal to the next is not all that different. You might have a different city, maybe, a heavier project that you're undertaking, but, kind of the mechanics are the same, and for the most part in value add multifamily. But what really was attractive to me is like, I look at these deals. I mean, as a passive investor, I mean, I'm looking at 15 to 20% annualized returns, maybe 7 to 10% cash on cash returns, and then phenomenal tax benefits. I mean, as a passive investor, I've always had depreciation offset my cash flow. So, if you're earning 8% on a deal, that's like getting, 10 or 11% in your pocket, depending on your tax bracket. So I just started, running the numbers in my head, and, looking at what others were doing, and knowing, personally what I was doing. If my target is 16%, that on an annualized basis, I'm like, if I can hit that, with compound interest, I'll double my money every 5 years. And that was a strategy I laid out that I felt like, that's very achievable. And it's kind of my sleep well at night number. And as I started getting into this, you start out small because the cash flow is, 7-8%. Sometimes it could even be lower in the first couple of years. But really kind of the tipping point for me was when I got to that 3rd year, and now all of a sudden I was experiencing some refinances in my deals. And then all of a sudden, we had a successful exit. And then when you take that on top of the cash flow, that's where I ended up getting to a 6-figure, passive income stream with the cash flow, and then the capital proceeds that were coming back from the refinances and the sales. And then what I would do would just roll that into the next deal, and I'd have even more capital working for me, which would increase my cash flow streams. And then it keeps growing from there. And so part of this is just getting the process started and kind of laying the foundation. I mean, it's not that hard to deploy the capital. I think the hardest thing is, making the money to have, but then also, along the way, building those relationships. So when you do have the money, where to put it. And then the rest is pretty easy after that. I mean, it's, you put it with good people that you trust and you let them go do what they do best. And that's just kind of my philosophy. And it's, I think, kind of how Warren Buffett operates, like, I mean, you surround yourself with good people that you trust and you let them do their job. And, hopefully, you've made really good decisions, and you'll see the results from that, down the road. So
Yeah,
I
I love it.
absolutely love it. And
Yeah.
it's changed my life. I mean, to be able to not only, invest in these deals, have that passive income stream, have, the extra family time and the ability to run my own business. But the greatest impact is being able to help others do the same, because I felt like, most people are pretty familiar with, the active route to real estate, where it's like, hey, how many, houses or doors do I need to acquire? And, how much cash flow do I got coming in? And you're trying to do that while you're working full time. And it's tough because, you're getting pulled in all these different directions, where, passively, when you invest in a syndication, I mean, it is, after you do your due diligence and you have an opportunity, I mean, it is as simple as wiring the funds, and then you're kept in the loop and you're hands off. And that was fairly easy to do when you're working full time, and you kind of dedicate, a few hours here and there to learning. And so that's a real path many can take.
Yeah.
And, it doesn't mean they have to walk away from their job. It means they can just build up some passive income that will give them more freedom, more flexibility, more opportunity. And that's kind of the beauty of the whole model.
Yeah, I love it. I love everything that you've mentioned, Ryan. I think there's so many good, wisdom, insight pieces, nuggets, however you want to call them, from your process. And, it's hard to get the capital in the first place. It doesn't happen immediately. But if you keep doing it and you're persistent at it, and you keep creating active capital and invest it for passive, what I love about your story, right, is even in the beginning, I didn't expect the refinance either, and I didn't expect those things to sell early. I invested and I said, "Oh, okay, this is going to be a 5-year deal." Okay, well, I don't have that money for 5 years. For those passive investors, that are listening, sometimes these deals they get refinanced. You get a little bit of piece back, or sometimes they sell early in a couple years, and you get cashed out, and you have this big chunk of change in your hand. And it's that plus, your again, your distributions, and you're trying to figure out, oh, great, I have 50K back sooner. And then your tax breaks, when you get money back from the IRS or the government, you're like, oh, I have a lump sum. Let's deploy it again. How quickly can I get 50K in my hands to send it away? Right. Oh man. And that was like a little bit of a freight train rolling for you, man, building up momentum and steam. And then it doesn't sound like it's stopping anytime soon now.
Yeah, I mean, I will continue to do this for the rest of my life because it's fun. And I also look at, like, this is just my personal, maybe biased opinion, but I chose, real estate syndication because I felt like it was the best investment opportunity out there to put my capital into, because of the cash flow, the ability to have upside, and then the phenomenal tax benefits. I mean, I can't get that in the stock market. Like, there's so much volatility. I can't count on the returns. There's really no tax benefits. And it's just a no-brainer. And it's pretty far drop from, say a 15 to 20%, return to, something that you don't necessarily know what it could be. And, but again, I always go back to diversifying. I would never say put all your eggs in one basket or in one deal. But, as someone who's tried to study all the different investments out there, it's a pretty compelling, investment when you get into it. And I see, I mean, nearly, just with our investors, I mean, it's almost nearly 90% have invested in multiple deals. And I think most people, when they realize, after the first one, it's kind of like, okay, I understand this, I get it. It becomes a strategy, because they're like, well, wait a minute, like, why am I not doing this with more of my capital? And so that's where the wheel starts spinning, and then they see their own path, their own, benefit to investing this way. And it's completely, up to them. I mean, this is their own money, their own capital, but, we're just trying to help educate and share what we're doing. But yeah, it's pretty cool to see others that, share the same passion, and we all love investing in real estate. Some just would prefer it to be more passive than to be actively involved. And I'm kind of here to tell people that there's another way to do it. And
Yeah.
it's worked for me. It's worked for many others. And and it's pretty cool to still, do all the things you want to do in life. And if you have a job that you absolutely love, like, you can do this completely on the side, and it just doesn't take a whole lot of time.
Yeah, it's perfect. This is beautiful. The perfect investment. Hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. So I think we've given a little bit of more than a few inspirational thoughts to all of the passive investors that are listening. They're like, I want to do what Ryan's doing. I want to go deploy my capital. Now, for the general partners, the active, sponsors, I think we have a following too. That's probably like first deal, second deal, maybe third deal. And we're trying to get the ball rolling on the active side. We've been passive. Now we're trying to go active. We're trying to really capitalize, right? So talk to us about some of those tactical steps that really helped you. Where were the flywheels? Where are the easy buttons? Where, not that there's an easy button, but you know what I'm saying? Where those buttons that we know, hey, this is the 80-20 rule. You hit that button again and again and again, and it allowed you to really scale massively. What were some of those tactical steps that a general partner, active partner, should think about?
I think you first got to, know what you're good at or what you're passionate about, because there's a lot of ways you can help in certain aspects. You could be the one that finds the deals, the one that helps with the underwriting or the financial aspect of the deal. Maybe you're someone who has got a lot of relationships and you want to work with investors, and you kind of find yourself kind of going into one or those two lanes. Obviously you can learn both and do both, but I think, if you're looking to try to add value, I mean, that's a way to start. And again, I would go back to surround yourself with someone who's already doing what you want to do, and then see if there's a way to help or to add value or to emulate what they're doing. And, it typically takes a team. I always say, real estate investing in syndications is a team sport. So maybe align yourself with someone who can complement your weaknesses, and you focus in on your strengths and double down on those. And, that's why partnerships are great, because, you might leverage someone else's expertise that you don't have, or that you don't care to really want to know, because you're not a numbers guy. You're more of a relationship person. And, so I think kind of knowing who you are first and what you want, is really important. And then go out and seek those people or those partners, or, the real estate groups out there that are doing what you want to do, and try to learn from them. You can read a lot in books, but, there's something about having those types of conversations and learning, directly from the source. And, I would say, it's okay to give up a piece, big piece of a deal to bring in good people, so that you increase your chances of success. Because in this business, all it takes is one bad deal, and, you could ruin your reputation and everything that you've built. So I would never want, anyone to be greedy, or myself to be greedy, because, you want first and foremost to put a great deal together for the investors. And if it's good for the investors, it's going to be good for you too. And I think, starting out, if, I would never try to, do it all yourself. I mean, go bring in experts, get help from others, and, learn from them. And then, in the future, you'll be able to kind of branch off on your own. But I think teaming up, especially early on, is super important, and it will help shorten that learning curve for you as well.
Yeah, that's good. Know who you are, know what you want, and seek out those people that seek out the groups or mentors, coaches, partners that are going to help you. Love it. And then, I think something that I dealt with a little bit, just a little bit before I got started was I was in single family for 10 years prior. Right. And it was like, no, me and my wife had to be like the main partner. I mean, well, I'm gonna say there's no partners. We were partners. But then even when we tried to partner, I was like, no, I got to be the 51% guy, or I got to, have the lion's share because I don't want somebody to take over this thing. Right. As I really started scaling up, even in the single family. And in commercial multifamily, it's like, no, you can't do this deal on your own. You're going to have many multiple partners. So, giving away a piece of the deal, do that for the experts. Grab the right people in, make sure that the investors are good. If you have the pros, the right expertise, and you pay them, everybody what they're worth, and everybody gets their fair share on that side, then man, all things are going to go really well. And as a new guy, it was never my piece of pie to actually distribute. So I've done, a number of deals, and I've been blessed to get on other large sponsors deals, or it's their piece of pie, and I got invited to the team. So I'm like, okay, this is where I'm at in my career as we talk, is like transitioning to the lead sponsor and now carving this up. Right. So I share that a little bit, with our listeners and you, Ryan, because, you've done something similar. Like you went from passive to active, and now you've got this crazy portfolio. Talk to us about some of those, phases within your business or yourself or your business that you've seen and gone through. Like, you were passive, then you did your first 5 deals, and then you went to 7 deals with other people. And then, just kind of give us a little bit of insight, like on those phases of growing to where you've done, where you've gone today.
Yeah. So it started with about, 12 deals, passively myself and other sponsors, opportunities. And then as I started to put my own together, I continued to passively invest in those deals as well. So I was both active and passive.
Yeah.
So, I was, benefiting as being an LP in these deals, but also with the GP, earning a piece of all these opportunities as well. And, now, if I fast forward, just my own personal investments in all these syndications, I'm in over 50 deals, mainly in real estate, but other asset classes too, other niches out there. And so it kind of keeps evolving, and it's a lot of fun, as you kind of know, our core is value add multifamily. So we've done, majority of our deals, fit that profile.
Mm-hmm.
And, so building that up has been, pretty cool. And kind of along the same lines of, getting, 2 to 3 years in on my personal investments, I started to see that capital coming back. Well, now as the GP, I'm 2 to 3 years in, starting to see that capital come back, and it's just I'm kind of
piece of the pie, bigger piece.
I'm
of the
stacking
pie
on
now.
both sides of the table here, and it's great to see and to do. But it takes time, and I really love being able to help and participate and invest in these opportunities because, first and foremost, I'm looking at every deal we do through the passive investor lens. I mean, because I am at my core a passive investor, and I always will be, because the active could go away. I could decide I don't want to do this anymore. I don't need to, or whatever. But like the passive, I'm always going to do, because, what else are you going to do if you've got money? You're going to have to keep redeploying it at some point, unless you're just going to have it sit in the bank account, which I don't think is a wise decision. You'll lose out long-term to inflation. So I think at the end of the day, most people, I think, are always going to have to be a passive investor. If you're not going to, I guess, want to keep your money in the stock market, you've got to kind of get somewhat educated, know what other opportunities are out there. And I think in the syndication business, we haven't even hit the tip of the iceberg as far as, just general, awareness and knowledge. And I still believe 99% of the population doesn't even know these deals exist. Mm-hmm. So I love when I get an opportunity just to share, what we're doing and what the industry's doing, because I see this not only shifting in real estate syndication, but also with angel investing. There's a big shift right now happening from Wall Street, the public companies, to these private, businesses, and, just how they're able to get funded and how people can easily invest in these deals. So I see that, continuing to grow. So yeah, maybe someday it's 100, properties we're in, and, and it keeps evolving, but there's going to be some that will exit, and then, that capital needs to be redeployed. So there's always going to be this, I think time where I'm, going to be looking at deals and new opportunities, which, keeps me knowledgeable with what's going on, even outside of real estate, because I do have to deploy, some of this capital, and so it's just been fun to build. I mean, I absolutely love, just seeing, each month, progress. And the cool thing about these deals is, like, as a passive investor, I mean, you could literally shut down what you're doing for 6 months, go travel the world, and come back, and you've increased your net worth, like, and you didn't do anything. I mean,
I
that's the
love it.
beauty
Yeah.
of,
Yeah.
real estate investing. And that's what attracted me at an early age. Cause I was like, wait a minute, that just seems too good to be true. How could you just, like, not work, but make more money? Well, as a
Hmm.
passive investor, you own an equity stake in these deals, and they're working for you while you're sleeping, while you're on vacation, while you're spending time with your family. And that was so attractive to me. And so to be able to be in a business that, you can keep growing that and helping others. I mean, that's really, what makes it a lot of fun. It doesn't seem like work, even though, I work a lot of hours. It's just, it's kind of my passion in a
Yeah.
sense. And so I just, again, when I get to help others and share, what we're learning, and kind of pass on that knowledge, because I was very, lucky that others who had more experience than me, helped me out when I was first getting going, and helped answer my questions. And
This is probably a good one here. How did you position yourself to be a great mentee to those mentors or coaches, the people that helped you? How did you position yourself for them to say, you know what, I want to help Ryan? What do you think you did?
I think I showed a genuine interest and curiosity in it, that, like, they could tell my wheels were spinning, and that, I was trying to put it together as I was reading, in books about this, but then I was also trying to apply it to real life, and also, like, trying to, be open with them. Like, look, this is something I'm seriously considering, and I'm just trying to kind of understand what it would look like, and, where maybe I could fit into the picture here. So I think that, there was, this ability to really, connect with people, because there's a lot of mentors out there that, you got to pay them to train you, to work with you. And,
Mhm.
that can be great. But, my mentors are typically people where there isn't that arrangement. It's more out of, they believe in me. They know that I'm going to, more than make up my end of the bargain, as far as, just, I'm going to come with some really, well thought out questions, and, going to do the kind of the dirty work to kind of position myself. So it's, more seeking advice and counsel, and instead of just, hey, tell me how you did it, and give me all your secrets. I mean, that's not how it operates. Over time you gain that trust, and that just comes naturally. But I think you have to show a willingness beyond what, maybe is normally, accepted in a mentor-mentee relationship, and then it'll come back, tenfold. So I definitely, felt like this is where I was going to end up someday. I just didn't really know how I was going to get there. And so along the way, I just, had a genuine interest and curiosity, and, and I was very thoughtful about people's time, and when I reached out to them, and what I was asking for, because, you never want to be that person that's just taking time from everyone, and you're just, sucking it away. Cause eventually, it's probably not going to last too long. So I think, you got to be smart about when you ask for something, how you ask for it, and just showing that, you can help add value if it's even needed. But I think there's an art to kind of knowing and reading people that is super
Mhm.
important if you're going to really, command busy people's time and schedule, because you're asking for them to give up something that's probably important to them, to
Yeah.
take time out of their day to help you. And, you got to make sure that it's, worthwhile to everyone involved.
Those are great, great points. Every single one of them. So I really fully appreciate that. I know there's a lot of people, that are listening, and I get asked a lot of times, well, can you mentor me or can you coach me? And I really don't have the time to do it. And then there are paid coaches and the programs, and I've joined a number of them to kind of help me fast forward. And then I have people that just honestly, genuinely helping me without any dollars or any fees. They're just kind of pushing me, in the right direction. But I've heard this a number of times, and you said it too. In the 80 interviews I've done now, is the mentee, or the person that's getting the information. Um, they are very much sewing back into that relationship. Here's what I've done with the information. Here's what I did. You show great appreciation. Genuine approach. Transparency was another kind of mindset that I know you didn't say it, but I kind of was thinking that.
Yeah.
And just, being genuine and honest with you. This is what I'm doing. Here's how I'm doing it. I'd love to learn more. And, there's a sincerity about it. And when the other person says, you know what, they're going to take this seed and it's going to become a mighty oak tree in the years to come. I'm going to go help this person water their seed.
Yeah.
It's pretty
No,
cool, man.
no, it's a
And
great way to put it.
yeah, the another one that I thought about was like Covey's. I think it's Stephen Covey. I'm pretty sure, but the emotional deposits from the emotional bank account, and so either a positive
Yeah.
deposit or a negative. It's either withdraw or deposit, right? That's what
Yeah.
it is. Deposit or withdraw. And the more deposits you have as opposed to withdrawals, you're going to come out of a great relationship, right? So I love
Yeah.
all these
And
things.
I think at an early age, knowing that, a relationship that you develop and cultivate over time, just because someone can't help you today or they aren't of value to you today, you don't treat them any differently, because you never know when that day is going to come where you're going to want to reach back out or tap into them. And, if you've always stayed in touch, you've always been genuine, I mean, there's a high likelihood that they're going to be, they're going to answer the phone when you call,
Yeah.
they're going to respond to your email and get together for lunch. And I
Yeah.
think you have to have that mindset, knowing that, even though if there's not value today, you just never know in the future. And if you treat people a certain way and with respect and care and love, I mean, it's going to come back at some point, and you really have to believe that. And it's worked for me, and I know it's worked for others. And so that's just kind of more of I guess, a mental philosophy in just in life in general and business. But
Yeah.
but yeah, that's just, how most people should probably, treat others anyways.
Yeah.
It probably goes without saying, but I feel like it's something as simple as that, can be so meaningful down the road, 5 years later, when you're reaching back out to that person that maybe lost touch with, but you made a really good impression with them, and just enough that they're willing to have that call with you, and then all of a sudden, the conversation could be life changing. It depended upon the opportunity, the timing of it, or what they could do for you. So you just never know.
It is worth overstating these points. And sometimes we say them, they sound so simple. And someone else maybe listening is like, hey, Ryan, tell me how to really do it. And Ryan's like, no, I'm telling you how I really did it. So just kind of think about that as we listen to this interview or rewind it a couple of times. It's really enlightening, my friend. So thank you. Before we go, I'm going to ask you maybe one or two more questions, and then,
Sure.
with our time, you mentioned like creating a list, Excel, 250 people. That was like your start to raise capital. So funny. I sold Cutco knives in college, and that's kind of what I did. In-home presentations, and
Yeah.
their suggestion is something that I still do today. It's get out a piece of paper and like brainstorm everybody, don't disqualify anybody, then go back and maybe requalify, and then start with those people. I still do that today. Like, and to hear you did it and started that way. Tell us about that approach. What did you tell those people? Help somebody that's never raised capital before, either a mindset or a thought, or like, how did you even approach that? So kind of dispel some of their fears in doing so.
Yeah. So, I mean, right out of the gate, I mean, this was never a sales opportunity, a sales pitch. There was never a worry about like, oh, what if they say no? The way I approached it, I was reaching out because I wanted to share, some news with them, that, I was starting a business, and that, I'd passively been investing in these multifamily syndications that, I really believed in, and they worked for me. And I wanted to share more about my experience and catch up. It wasn't like, hey, here's going to be a pitch on, why you should do this. It was, a genuine interest in catching up over coffee, but I also wanted them to know what it was about, that I was, going to be sharing, some news that I was, starting a company, and it was coming on the heels of, successful investments I had made, and, really high interest rate, and just, people wanting to get together, have that cup of coffee or that call. And so when I was sharing, what I was doing with them, I even told them, look, this is, more or less an opportunity to learn something, that is super, passionate to me. It's done well for me. And I just, would hope at the end of the day, if you came across a great opportunity, something that you really felt strongly about, that you would give me that call. You'd think high enough of myself as someone that you trust in your network that you'd want to share what you're doing. And I hope I get that call, because I wouldn't want to miss out on learning something that, might be valuable.
Yeah, that
And
could
it was
change your
that
life
mindset,
also.
that conversation that, was like, yeah, thank you for sharing, what you're doing with me. Like, I really appreciate, that you reached out, and hey, the timing's good, like, yes, keep me in the loop, because, we have been thinking about, like, maybe we need to diversify more, and like, those are how the conversations went. And it was just so easy going, easy flowing. And I would share, here's how my experience has gone with these other deals I've invested in. It was never about, oh, here's an opportunity. Here's like, I need to know tomorrow, are you in or out? Like, and so I think most people do it in a way that comes off as like, they got to make a decision now. And it just kind of can be awkward. And, it's all about planting the seed and nurturing that over time, so that when an opportunity does come along, and, you maybe had several conversations, they're familiar with what you do, and they know that, like, that's just kind of how the process works. And so I that was my approach. I mean, there wasn't anything like magical to it. It was very simple and authentic.
Yeah.
But I feel like I had a pretty big network to tap into from the get-go, which I think is super important. And the other point I'll make too is, just because, you're meeting with someone that maybe wouldn't fit the profile of, a typical investor, or maybe, maybe they're not even interested in investing, it's still important to share what you're doing, to, if they obviously want to learn more or know more. But the value here is what I've seen kind of play out over and over again. It's not just them, it's their network. And you have to know that they know people. And when you're talking with them, I mean, it's going to go to other people if they care about it, or even if they don't, but they know other people that might have an interest in what you're doing. I mean, I can't tell you, I mean, my business today is all on referrals and, word of mouth, people coming to the website. I mean, I stopped all the coffees and, because I went through my whole network and I spent all my time doing that. But eventually, after 18 months, all the momentum started, working for me. And now it's just referral based. And that's the best kind of, introduction you could get. And that's, where I always had hoped to get to. And so I always took the approach of like, I don't know, who this person knows. And if I treat them well and try to, give a good experience, good education on what I'm doing, you just never know how many people they're going to touch and tell. And that definitely has come back many times over.
Yeah, I love it. Well, thank you very much for sharing. And I want to be respectful of your time. We're at the top of our hour, but it's been an amazing conversation. Very helpful, very valuable. Just, all the way around. Thank you very much, for joining and sharing your story. So
appreciate it, Abel. Thanks for having me on here.
Yeah, you're the man. Absolutely. Where can our network, our listeners, if you're viewing on YouTube, where do we reach out to you to get closer into your world, or if we want to invest with you and, just, get in your world, where do we go?
Yeah, the easiest place is just our website, mckennacapital.com. From there, you can sign up on our newsletter distribution list. We have all links to articles that we've written, podcasts that I've been on, but all the social sites, LinkedIn, Twitter, Facebook, Instagram. I mean, you can follow us, any of those social mediums. But I think starting with the website is probably the easiest way just to get connected. And I'm always happy to chat. We set up time to talk or email, whatever works best. But I look forward to connecting and hopefully, hopefully this is some good content for others that are, learning and, kind of wondering maybe what others are doing out there.
Yeah. Yeah. Thank you very much. I really appreciate it. And my name is Abel Pacheco. I'm your host for the 5 Talents podcast. We appreciate you listening. Hope to see you at our next show. And Ryan, it's been amazing. Thank you very much.
Oh, thank you, Abel. This was great. Really appreciate the time again. And look forward to staying in touch here.
All right. Thank you. Bye-bye.
Thanks.
Thank you for listening to this episode of the 5 Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who follow their dreams and achieve massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents podcast.